Home sales dropped by double digits in Toronto last year. Let's dig into all the reasons behind that with Daren King, senior economist at National Bank Capital Markets. Daren, thanks for joining us today.
Thank you for having me.
So borrowing rates, we know, came down, clearly not enough to get potential buyers out there. They had other concerns. Was job security likely the biggest?
I think the real factor behind the drop we had this year was definitely all the uncertainties we had with the trade conflict with the U.S., which really shattered consumer confidence. Obviously, people were asking themselves if they will remain with a job over the next few months. So that really had a huge impact on the number of transactions we had during the year, definitely.
Okay, so we know that tariffs were a big concern at the start of the year. Some of that noise died down towards the end of the year. Are you surprised we didn't see a bit of a turnaround by December?
Yeah, I think we've been a bit surprised that the latest interest rate cut we've seen by the Bank of Canada did not really pick up really much more transaction to the market. Also, we've seen better job numbers over the past 3 months now as well. But yes, we were a bit surprised by that. But definitely, I think we're starting 2026 on a good footing, and we're expecting probably a higher number of transactions. But there's still plenty of uncertainties that we'll probably face during this year. Obviously, consumers are getting used to it, businesses as well. So maybe they'll be more secure about their job situation and will be able to take action into the market. Let's hope for that, obviously. But still, we're facing definitely headwind with the new all the changes with the immigration policies. That's another drag that will continue over the next few years. So we'll probably see a pickup in sales over the next few months, but I'm not expecting really a jump in transaction and still a slight, probably slight decrease in home prices over the next few months and a pickup by the end of this year.
Okay, so let's talk about Toronto specifically in the sense that is there just a bigger mismatch in Toronto because of the glut of condos we've talked about all of last year, and perhaps that's not what is wanting what buyers want, and that perhaps is just what's sitting around and being that dragged down on Toronto's market?
Yeah, I think definitely there's a mismatch, definitely with the units that people want and what is available on the market. But we saw a record number of new listings on the market this year, the highest number of new listings since the data began in 1980. But I think there's two other factors that are at play here. First of all, affordability issues in Toronto remains one of the biggest issues. It's one of the least affordable city in the country, and obviously, when you're facing that kind of uncertainty, then affordability issues are amplifying that uncertainties. So because it's a big financial transaction, and it's really difficult for people to take such risk in that kind of market. Also, we've really seen a bigger slowdown in the job market, especially in Toronto, with plenty of student immigrants coming into the city. And obviously, those are the people that are the most impacted when we're seeing a general economic slowdown. So I think that's two other factors that might explain why Toronto especially we saw such a slowdown this year.
So Daren, as you know, the government's trying to get first-time buyers into the market. They're offering different initiatives that will come out this year to try and get them to get off the sidelines. Do any of them sound like they're enough to make that happen?
I think when we're talking about incentive to get new first-time home buyer to the market, when we're playing on the demand, it's always a double-edged sword, because if you're giving easier, if you're putting easier norm or easier way to get a mortgage, then it will push price up again, and that will counterbalance in some way the impact that you want really for first-time home buyer. I think the only solution that we really have for the affordability issue that we're facing at the moment is really to put more supply into the market. Listen to customer what they really need. We have been talking about obviously the condo market, especially in Toronto, that is definitely sluggish at the moment, given the fewer investors into the market. So I think that developers really need to assess what is the consumer need at the moment, put more supply on the market, and definitely that will take several years before we really achieve better affordability condition in Toronto.
Okay, you touched a little bit on sort of what you think 2026 will look like. Can you expand a little bit more on the Toronto market and what you foresee, given, as you mentioned, the uncertainty is still around as far as people's jobs go and whether or not they're in a good place to make those big buys?
Yeah, obviously, we'll probably continue to see plenty of uncertainty during the year, especially with the USMCA negotiation coming probably by the end of this year. But I think that people are getting used to the trade situation with the US. They'll get used to that kind of uncertainty. So that will probably help the market to pick up, the resale market to pick up in the coming months. And like I said, we are starting to see the job market that is also getting better, so people will be more confident about their situation, and thus we're expecting a pickup in transaction because of that. Interest rate also declined during fall. We haven't seen the full impact of that, the monetary policy easing yet. It will come into the year, so all those factors are positive, but obviously, Toronto is probably the city in the country where the immigration policy change is the biggest drag. Of course, the biggest impact in the short term is really on the rental market because most of the immigrants are really in that segment. But usually it takes approximately 3 years on average for a new resident who want to become a homeowner to do so. So it will be a drag for the next few years. But the good news is that it won't be a really hard hit in 1 year, but it will be split over the next few years. So I think that the market can perform well still in that condition, but probably not at levels we've seen during the beginning of the pandemic, for example. So we'll probably have moderate level of transaction, but probably a better year in 2026 than what we had in 2025.
So a bit of a longer, slower drag. All right, Daren King, thanks for joining us. Appreciate your time.